Hello and welcome to Business Reporter's Future of Financial Services and Banking campaign. I'm Ashley Blake. Large banks, legal companies and other regulated entities require detailed information on the backgrounds of customers and clients they're dealing with. They need this to ensure they're not being used for money laundering and other means of financial crime. But the process of conducting these checks manually is costly and time-consuming. They often need to be undertaken on companies and individuals in overseas countries and require the compiling and processing of huge quantities of data. But what if all of this was automated? This is what we're going to discuss today with Nick Ford, VP of Strategic Alliances, Encompass Corporation, and Chris Laws, VP of Product Strategy at GTM, Dun & Bradstreet. Good morning, gentlemen. Thanks for joining us.
Morning.
Nick, let's start with you. Why is KYC due diligence essential for banks and other companies in regulated industries?
I think besides it being essential, it's a requirement for regulated institutions to understand who they're doing business with. There is a requirement to understand who the ultimate beneficial owner is, to understand if there are any related entities within the corporate hierarchy that are sanctioned or politically exposed. And if we look at that process, you can quickly understand the requirement to, understand the risks within that corporate structure.
What are the main challenges companies face during due diligence?
It comes down to accessing data. Global data sources, multiple data sources. And we know from how institutions are operating today, it's a very manual process. We're looking at regulators, registries, listings, business data sets, data suppliers for sanctions and PEPs or politically exposed individuals, and then adverse media. And if I take the problem of what does a KYC analyst do within these firms, they will be accessing these sources individually, in some cases, manually, downloading information, uploading information, rekeying information, and becomes very error prone, not to say the time that it takes to actually acquire and understand this information. Now, when you take that as a problem, of course, you've got inefficiencies. You've got that error-prone side, so mistakes are unfortunately made, but also the time that it takes to onboard those customers. We've seen with some firms this taking weeks, if not months, to onboard some customers. And if you take that problem into a remediation process, so away from a BAU, you're talking large volumes, large amounts of entities, and that problem becomes exponential. The second part of that, of keeping that information up to date, is of course, once that customer's been onboarded, depending on the risk categorized or assigned to that customer, that information needs to be refreshed and changes happen, changes are made. So it is crucial that information is kept up to date, but if you're running a manual process, continually manually accessing that information, you can see the problem.
Chris, what would you say are the consequences of the problems Nick was talking about?
So, ultimately it's all about the risk profile of that financial institution or their exposure. So, but if you break that down a little, what does that really mean? So a combination of exposing the company to regulatory firms, to fines, or potential reputational damage. And then at a more micro level, so within the organisation, the compliance operations themselves, driving significant cost within the organisation, which obviously takes away from other things that that firm may wish to invest that capital in. So if you then look at some of the problems that sit below that issue, so ultimately if the issue is risk and cost, then what are the things driving it? And building on what Nick talked about there, finding the right information, pulling it together, reducing error, and then managing it on an ongoing basis. Ultimately, around the world, there's some 430 million businesses. And if you look into the effort involved in pulling data together there, you can see just how challenging that can be. As an example, if you look at shareholders or beneficial owners, as we talk about them today, part of understanding risk is to find out who ultimately benefits from the business funds and then check in if they're on the sanctions list. Now, in a typical day, around 77,000 beneficial owners change each day. So this just identifies, or I guess puts a magnifying glass over the type of challenge that financial institutions are facing. And when we look back over the past 12 months, some of the largest fines issued went to banks that found challenges or didn't address the challenge of dealing with that in adequate time.
So, I mean, the whole process as it stands sounds very long-winded and very time-consuming, and it's bound to be costly. Is there a better way of doing this, Nick?
Actually, of course there is. Where we've seen a lot of firms, they are starting to go down this journey of what they're calling PKYC or perpetual KYC. And that's the process of ultimately keeping information up to date. So we mentioned changes or ensuring that that information is correct at all times. Perpetual KYC is this view that at any given point, that information is correct. Now, in order for firms to get there, it is a journey, as I referenced, but it's a lot for a financial institution or a regulated firm to change its digital operating model. We've seen a lot of firms taking, or at least forecasting, to take up to 10 years to get to that state.
So, Chris, how long does it take banks to adopt PKYC, and can the benefits be realised sooner?
Yes, actually, absolutely. So if you look at the type of 10-year horizon that Nick just outlined there, I think the big challenge that we saw in financial services was, getting access, not only getting access to the data, but making it decisionable, putting it into an environment where the practitioners within its compliance department could decide what to do about that. Yeah. We've all heard these stats about the rate of change that we've talked about, the volume of information and data that's now available in the world, but actually capturing it, putting it into systems that can actually take decisions for you or help you reduce the effort to decide where you need to focus. So as an example, if a bank has got thousands of businesses on its books that it reviews each couple of years as part of its periodic review, going towards PKYC enables them to say, well, which records have actually had a change that we care about? So let's focus on those, not let's look at everything. And products like the Encompass platform and data providers like Dun & Bradstreet can really help banks to adopt processes and systems within weeks or months, not months or years.
So do you expect a massive shift towards automation?
I think we do. I mentioned the word journey there. There very much is this notion, or at least a belief, that it requires cultural buy-in. It requires a mature data management process, and those things can happen. We believe the start there is KYC automation, where you can realize those benefits sooner, in weeks versus months or years. And you can also have the ability to scale.
These organizations have seen a huge shift this last year especially. The COVID epidemic forced businesses that hadn't automated to have to automate. The fact was, in the past, you could add more people and you could go to lower cost jurisdictions to do that, but simply essentially scale an old way of doing things. But when COVID hit, all of a sudden offshore employment became much less able to deal with your business's needs. People weren't able to work from home. And all of a sudden there was real issues that they had to think about very, very quickly. Yeah. Perhaps more than just it being an option to reduce cost, it became a necessity. So I think because of that, and the change in the technology landscape, we will see more and more adoption of technology, either because it's for operational need or because of a reduction in cost and a reduction in risk profile.
Nick, Chris, thanks very much for bringing us up to date on the journey of PKYC. Thanks for coming in and talking to Business Reporter. Good to meet you.
Thanks.